Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, GLBE Online, the cross-border commerce infrastructure company growing 35% while helping top brands sell everywhere at once.
GLBE was founded in 2013 in Petah Tikva, Israel, by a team from eBay's international division. They identified that cross-border selling was structurally broken for brands, too complex and too fragmented.
GLBE listed on NASDAQ in 2021, raising $500 million. The same year, Shopify named GLBE its official cross-border partner, embedding the platform inside the world's largest merchant ecosystem.
Amir Shlakit co-founded GLBE and has served as CEO since inception. His background at eBay's international operations gave him direct visibility into the localization gap GLBE was built to close.
Most recently, GLBE reported revenue of $148 million, up 35%. GMV grew 38%, with net revenue retention above 130%.
Retention above 130% means existing merchants grow cross-border GMV faster than any churn. That cohort compounding is the core unit economic powering the long-term model.
GLBE's core moat is the Shopify partnership. As the official cross-border layer for Shopify's merchant base, GLBE is the default integration for any Shopify brand going global.
The localization data stack is the second moat. GLBE processes transactions across 100 currencies and 200 payment methods, each transaction improving per-market conversion models.
The long-run thesis is global commerce becoming the default. Brands not selling cross-border are leaving 30 to 50% of their addressable market on the table, a share that is only growing.
Against border-free and in-house builds, GLBE competes on conversion rate. Its localization engine consistently drives higher checkout completion than any merchant-built alternative.
Cross-border e-commerce is growing faster than domestic commerce globally. Consumers buy across borders at accelerating rates as digital payment infrastructure and logistics improve.
The near-term challenge is Shopify dependency. A material share of GLBE's pipeline flows through Shopify. Any change in Shopify's strategy or partner terms creates direct concentration risk.
Gross margin pressure is a structural risk. Fulfillment and duty absorption services carry lower margins than pure software. As merchants demand end-to-end services, blended margins can compress.
New entrant risk is building. As cross-border commerce grows, Shopify itself could build internal cross-border capabilities, reducing GLBE platform dependence over time.
Enterprise brand penetration is the medium-term catalyst. Reaching the top global fashion and beauty brands dramatically increases GMV per merchant, shifting revenue toward higher-value accounts.
Regulatory tailwinds are strengthening. Post-Brexit, UK rules and EU digital single market are creating compliance demand that GLBE manages natively, a structural advantage for regulated markets.
At $9 billion in market cap, with 35% GMV growth and 130% net revenue retention, GLBE is priced as sustained hypergrowth supported by durable cohort economics.
GLBE just reported another quarter of 35% growth. Cross-border commerce is becoming a standard enterprise requirement rather than an optional add-on.
Let's get into the merchant cohort data and what the Shopify integration depth means for long-term defensibility.
Cross-border commerce, localization data, and a Shopify partnership. GLBE is the infrastructure behind every brand's international expansion. Now let's get into the numbers.
Cross-border e-commerce just grew 33% in a single quarter, and GLBE is the infrastructure that makes it happen. Revenue of $252 million, a 22% earnings beat, and a 12.5% revenue surprise. Every brand selling internationally through Shopify is running through GLBE's rails whether they know it or not. This quarter confirms the flywheel is compounding.
Welcome to Charged Alpha. I'm Lana, here with Hudson. Today we're breaking down GLBE Online's Q1 2026, the cross-border commerce infrastructure company that is quietly becoming one of the most important rails in global e-commerce, and just delivered one of the largest revenue beats in its history as a public company.
Quick orientation. GLBE Online, ticker GLBE, is headquartered in Petah Tikva, Israel, founded in 2013 by CEO Amir Shlakit, with approximately 2,000 employees. The company enables brands and merchants to sell directly to international customers across more than 200 markets worldwide.
GLBE handles everything that makes cross-border commerce complicated. Local currency pricing, local payment methods including iDeal in the Netherlands, BLIK in Poland, Boleto in Brazil, duties and taxes calculation, customs compliance, fraud prevention calibrated to each market, and returns management. The merchant's storefront stays on Shopify, Salesforce Commerce, or their own platform. GLBE embeds as the international checkout layer transparently to the consumer.
The Shopify partnership is the company's strategic moat. Shopify holds an equity stake in GLBE and deeply integrates it as the preferred international commerce solution for its nearly 4 million merchant base. Former Shopify president Harley Finkelstein sits on GLBE's board. The relationship makes GLBE the default international selling solution for the Shopify ecosystem, a distribution advantage that is extremely difficult for competitors to replicate.
Q1 2026 revenue was $252 million, up 33% year-over-year from $190 million. That beat the $224 million consensus estimate by 12.5%, the largest revenue beat in 5 quarters. The beat was driven by stronger-than-expected gross merchandise volume and a mix shift toward higher-value enterprise brand customers who generate more revenue per GMV dollar.
Non-GAAP earnings per share came in at 49 cents versus the 40-cent consensus, a 22.5% beat. That is 4 consecutive quarters of double-digit EPS beats. Gross margin improved to 38%, up from 35% in Q1 2025, reflecting the enterprise mix shift and higher attach rates for premium services, including fraud prevention and advanced returns management.
GMV, gross merchandise value, the total value of cross-border transactions processed, grew 38% year-over-year, outpacing revenue growth of 33%. The divergence reflects take rate normalization as larger enterprise clients negotiate slightly lower processing rates in exchange for volume commitments. This is a healthy dynamic. It means GLBE is winning larger, more strategic accounts that generate higher absolute revenue even at lower percentage take rates.
The enterprise brand mix shift is the qualitative headline. GLBE has been signing Tier 1 global brands, companies with global recognition and significant international consumer demand that generate 10 to 50 times the GMV of a typical mid-market Shopify merchant. Each enterprise win creates multi-year contracted revenue visibility that compounds the base and reduces the quarter-to-quarter volatility in the revenue model.
New market expansion is a parallel growth driver. GLBE has been adding supported markets and payment methods in Southeast Asia, Latin America, and the Middle East, geographies where cross-border e-commerce penetration is rising rapidly. Each new market added to the platform increases the addressable GMV that any given merchant can process, making GLBE's value proposition more comprehensive with each quarter.
Operating cash flow for the quarter was $38 million, reflecting the capital-light nature of the business model. GLBE does not build or own physical infrastructure. It builds software, compliance databases, and payment network relationships. Free cash flow remains positive and growing, and the company maintains $500 million in net cash with minimal debt. The balance sheet is a strategic asset.
Amir Shlakit co-founded GLBE and has led it from a startup through its NASDAQ listing in 2021. On the Q1 call, he emphasized that the company is still early in the global e-commerce opportunity. Most brands sell internationally today through third-party marketplaces like Amazon International, rather than direct DTC channels. Each brand that transitions to cross-border DTC on GLBE's rails increases GMV in a way that does not cannibalize existing revenue.
Wall Street is bullish on GLBE, with 10 buys, 2 holds, and 0 sells at an average price target of $60 against the current $50. The consensus reflects high conviction that the cross-border DTC trend is structural and multi-year, and that GLBE's Shopify partnership creates a distribution moat that makes the growth durable even as the category becomes more competitive.
Goldman Sachs's buy focuses on the network effects embedded in GLBE's compliance database. Each market GLBE adds requires building out local tax rules, payment method integrations, customs documentation, and fraud models. That database has been built over 10 years of transactions across 200-plus markets, and it compounds with each new transaction processed. A new entrant would need to replicate 10 years of compliance engineering to compete at parity, which creates a high barrier to entry that static software cannot describe.
Needham's strong buy is based on GMV growth outpacing revenue growth. The 38% GMV versus 33% revenue implies that GLBE is processing significantly more transaction value than last year, and that the current cohort of larger enterprise clients will generate more revenue as their GMV grows. Each dollar of new enterprise GMV compounds on itself, creating a revenue trajectory that is more predictable and higher quality than the earlier SMB-heavy cohort.
The two hold ratings share a common concern about Shopify concentration risk. Shopify generated a meaningful share of GLBE's GMV through its merchant network. If Shopify builds competing international commerciality natively, reduces the commercial partnership terms, or loses market share to Wix, BigCommerce, or another platform, the impact on GLBE's revenue would be immediate and difficult to compensate through new channel development.
Foreign exchange is also a structural wildcard. GLBE processes transactions in local currencies and translates GMV to USD for reporting. A significant dollar strengthening against the euro, pound sterling, and Australian dollar would reduce the USD reported GMV and revenue even if transaction volumes in local currencies are growing. FX headwinds in 2025 were a material factor in several quarters. They can flip to tailwinds just as quickly.
The bull case starts with DTC e-commerce penetration still being early. Most global brands still sell internationally through Amazon Marketplace, eBay, or local distributor networks rather than direct-to-consumer international storefronts. The shift to DTC international commerce is a decade-long trend driven by margin economics. Brands keep 60 to 70 cents of every DTC dollar versus 20 to 30 cents through a marketplace. GLBE is the infrastructure that makes DTC international possible at scale, and the share of cross-border commerce that flows through it is still a small fraction of the total opportunity.
Enterprise brand adoption is still in early innings. GLBE has signed hundreds of enterprise brands, and each brings 10 to 50 times the GMV of an SMB account. As GLBE's track record and reference customer list grows, the sales cycle for the next enterprise win shortens. The network effect in brand adoption, where fashion houses sign after seeing competing brands succeed, is beginning to compound, and Q1's revenue beat suggests the pace of enterprise adoption is accelerating rather than plateauing.
The bear case centers on Shopify concentration risk materializing. Shopify has announced incremental international commerce features, including improved local currency checkout and expanded market support. If Shopify decides to internalize GLBE's core functionality rather than continue the partnership, the revenue impact would be immediate. The equity stake Shopify holds in GLBE creates aligned incentives today, but commercial relationships evolve, and vertical integration is always a risk in platform ecosystems.
Take rate compression is the margin risk over time. As enterprise clients grow as a percentage of GMV, they have more pricing power in contract negotiations. The 38% gross margin in Q1 is strong today, but if enterprise clients negotiating at scale push take rates down while SMB merchants churn to lower-cost alternatives, gross margin could compress toward 30% or below, requiring higher GMV growth to maintain revenue growth rates.
Amazon Global and Shopify markets building natively are the competitive risk from incumbents. Amazon has the logistics, the merchant relationships, and the consumer trust to offer cross-border international commerce at scale, and they have been investing in improving their international merchant tools. If Amazon creates a compelling DTC international alternative that does not require GLBE's middleware layer, it could capture the premium enterprise segment that GLBE has been targeting.
Options activity on GLBE was very call-heavy following Q1 results, with the put-call ratio sitting near 0.38, one of the most bullish readings among software companies on earnings day. Call buyers targeted the $55 to $65 strike range for the October expiration, positioning for continued GMV acceleration into the holiday shopping season that historically drives Global E's strongest quarter of the year.
Implied volatility is moderate at approximately the 55th percentile of Global E's historical range, reflecting the market's growing confidence in the predictability of the revenue model. Companies with consistent 12+% revenue beats tend to see IV compress over time as the market reprices the downside risk as lower. Global E's IV profile is consistent with that pattern. The market is increasingly treating it as a high-quality compounder rather than a high-risk growth bet.
CEO Amir Shlakit and co-founders have not reduced their equity positions following the Q1 beat. Shopify's equity stake is reported in its financial filings and remains unchanged. The strategic partners' equity alignment continues to reinforce the commercial partnership. Board member Harley Finkelstein's Shopify connection provides a direct channel of communication between the two companies' strategies, which reduces the risk of a sudden partnership deterioration.
The primary catalyst for Global E is continued GMV acceleration in Q2 as the holiday season setup begins. Q2 historically shows strong new merchant cohort acquisition as brands plan their international expansion ahead of the summer and back-to-school selling season. If Q2 GMV growth comes in above 40% and revenue beats the $280 million estimate, it would confirm that Q1's large beat was the start of a new phase of acceleration, rather than a catch-up quarter.
A major enterprise brand announcement, a Tier 1 luxury goods group, a global sporting goods brand, or a multinational consumer goods company would be a significant catalyst. These announcements typically generate GMV well above what the sales cycle implied during the pilot, and they generate additional enterprise referrals that compress the subsequent sales cycle. The compounding nature of enterprise wins means each public announcement tends to beget the next.
The key risks are Shopify building competing features that reduce the commercial dependency on Global E, FX headwinds returning in a dollar-strengthening environment, and the enterprise take rate compression accelerating faster than new merchant GMV growth can compensate. Any one of these risks materializing simultaneously with a broader e-commerce slowdown would create a revenue shortfall that would test the stock's 30 to 35 times forward earnings multiple.
That's the Global E Online Q1 2026 breakdown. 33% revenue growth, 38% GMV growth, a 22% earnings beat, and the largest revenue surprise in 5 quarters. The cross-border e-commerce flywheel is compounding. Enterprise brands beget more enterprise brands, and every new market added makes the platform more valuable to every merchant on it. Subscribe to Charged Alpha for the next chapter in this compounding story.
Charged Alpha content is for educational and entertainment purposes only. Nothing you hear on this show should be taken as financial advice. We do not hold positions in the securities discussed unless explicitly stated. Always do your own research and consult a qualified financial advisor before making any investment decisions. This is Charged Alpha. We charge forward, so you stay informed.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.